So, Lynn, you've become super popular now. I think you're at Twitter. I was just looking at it with your energy tweets yesterday, last night. Over 400,000 Twitter followers. Your analysis is amazing. You cover a lot of different topics. So, in your opinion, what are the biggest risks right now to the global economy?
Well, I think the number one biggest risk is energy security. I don't think that's super controversial, given the headlines around the last several months. Um, and this problem was building for a while. It wasn't just because of the war, but that of course exacerbated, accelerated what was already a pretty fragile situation. And so Europe has significant energy security, and taken as a whole, that means the whole world basically has this current energy shortage problem. And of course, energy is like the key input into almost everything. So that means, in many countries, that's going to be a food price and shortage problem. And so that kind of translates into everything. And I think if there's a second problem, it's probably the fact that there's so much debt in the world that central banks are unable to use some of their normal tools to deal with inflation. And in general, they primarily use backward-looking indicators. So whereas in theory they're supposed to be more like counter-cyclical forces on their economies, too often they end up being pro-cyclical economy impacts on their economies. And so, for example, right now, most leading indicators and kind of current indicators are suggesting, pretty significant downturn in economic growth, and we have central banks, trying to tighten policy into that. Whereas, if anything, if they wanted to tighten, last year would have been a better time for them to do that. So I think that we have kind of a perfect storm of a lot of problems coming together.
You and I are definitely thinking on the same page because I was going to bring up that I think governments and central banks, their bad policies are the main problem, especially with energy. I am seeing almost every day just bad energy policy after bad energy policy after bad energy policy coming out from these governments. And I think you were writing articles about this over a year ago. So you didn't just hop on this trend. You've been warning about this for a while now.
Yeah, I guess something's right, something's wrong. Energy is one that I've been pretty correct on. Maybe it's because it's, I have like an engineering background, and it's just something I focus on a lot because it's so important. And so Yeah, last year I started writing a lot, really long form pieces around energy. And then I updated it. That the first big public one was, in the middle of 2020. Middle of 2021, and then I updated again in December of 2021 about basically, energy shortages, particularly oil and gas. And I wrote about uranium to my research subscribers back in 2020 as well. So this is a theme I've been tracking for, a year and a half, 2 years almost. And it's something that I think is, long term is just getting started, even though, if you destroy demand enough, you can push down prices temporarily. But I think that it's still there's more until there's more supply capacity coming online, this is going to be a problem. And to some extent, commodities are inherently cyclical. There's always periods of overinvestment, underinvestment. It's always challenging for companies that cannot control the price of their own product. But then, yes, when you add bad policy onto that, you can make the problem go from, like a normal level cyclical problem to a rather disastrous outcome.
And if we did have a crash in energy prices, I think things would play out similarly. I don't know if we're going to have negative oil futures, but I think we would have a very big snapback rally within 2 or 3 years, very similar to what happened in the first quarter of 2020, where oil prices crashed, natural gas prices were in a bear market for a long time, a ton of supply came offline. And then here we are now, about 2 years later, maybe a little over 2 years later, and look where the oil price is, despite the global economy slowing down enormously, despite policy decisions that look like they're trying to kill energy demand.
Yeah, I think it's I would describe it as trying to like hold a beach ball underwater, where if you put a lot of force on it, you can hold it down temporarily, but as soon as you let go, it's going to come back up. And so to the extent that they want to engineer enough demand destruction to get a severe recession, that of course can temporarily bring down the price. But then as soon as they encounter too much pain in that recession for their own liking and they want to stimulate out of it again, I think the energy problem is going to be right back there because we don't see a lot of supply coming online anytime soon, especially long-term supply, right? So, some of the longer term projects, 7+ year projects, we don't really see a lot of that coming along because there's a lot of risk bringing like $1 billion gigantic long-term project online. If you look at oil futures out a few years, they're priced cheaply. compared to current prices. And so they're basically telling oil company CEOs not to invest too heavily because the market is still kind of pricing in transitory high oil prices. And so there's not a lot of incentive, after the whole 2010s, especially, especially the second half, oil companies were, kind of that middle part of the decade, actually. Basically, a lot of oil companies, especially in the US and Canada, were bringing on supply that was not profitable. They were just bringing on this non-free cash flow positive supply. And eventually, investors got sick of it. And ESG mandates made a lot of investors want to, divest out of it. And so that space, we had hundreds of bankruptcies in the US in that space. And the remaining oil companies had to be more disciplined with their capital deployment. So instead of just constantly issuing debt and equity to drill unprofitably, they had to start focusing on profitable growth and paying down debt and being more conservative. And I think that's going to be here for a while, especially when, there's a lot of, environmental pressure on them as well. And then now when you see headlines about windfall taxes or oil price caps and things like that, not a lot of outside capital necessarily wants to pour into that sector, even though the prices are pretty high right now. And so I think it's just kind of a perfect storm of stagflationary policy that I think can persist for quite a while. And one more point I'd make is that if you look at the whole post World War II period of global energy consumption, so not just one country but the whole world, there were only 3 periods where the whole world had like reduced year-over-year energy usage. And so that was for a few years in the early 1980s, after the whole Volcker raised the dollar, it basically raised interest rates, raised the dollar. The whole kind of world economy went into a pretty significant recession. You had a lot of emerging market slowdowns, debt crises there. So that was like a big down couple years where energy was not growing. Then you had, of course, the global financial crisis. That was 1 year of down energy usage, and then 2020 with the lockdowns was the third. And so periods of global energy reduced demand consumption are very rare, and they're associated with like the most severe economic situations of this whole modern era.